Let me ask you something. What if the home you've worked so hard to pay off could actually start working for you? Imagine unlocking the value of your home without having to sell it, move out, or take on a new monthly payment. Sounds too good to be true, doesn't it? Well, for many seniors over 70, this isn't just a dream, it's a real possibility thanks to something called a reverse mortgage. But here's the thing. Reverse mortgages are one of those topics that can feel a little mysterious, maybe even a little intimidating. You've probably heard mixed things. Some people swear by them while others warn you to steer clear. So, how do you know if it's the right move for you? That's exactly what we're going to explore together today. In this video, we're going to break it all down. No jargon, no confusing fine print, just a straightforward conversation about the 6 key pros and cons of reverse mortgages after 70. Whether you're looking to supplement your retirement income, cover unexpected expenses, or simply enjoy your golden years with a little more financial freedom, this is the place to start. Let's begin with one of the biggest advantages of a reverse mortgage: the ability to access your home's equity without having to sell or move out. For many of us, our home isn't just a place to live, it's a treasure trove of memories. It's where you raised your family, hosted holiday dinners, and built a life you're proud of. But it's also one of your most valuable assets. A reverse mortgage lets you tap into that value while still living in your home. You don't have to pack up, downsize, or say goodbye to the place you love. Instead, the loan is repaid later when you sell the home, move out, or pass away. This can be a huge relief for seniors who want to stay in their homes but need extra cash to cover things like medical bills, home repairs, or even just the rising cost of living. Think about it. What would it mean to you to have that financial cushion? To finally take that trip you've been dreaming of, or to fix up the house so it's more comfortable and safe as you age? A reverse mortgage can make that possible, but, and this is a big but, there's a trade-off. While you're accessing that equity, you're also reducing the amount of wealth tied up in your home. That means there may be less to leave to your heirs later on. If leaving an inheritance is important to you, this is something to think about carefully. It's not necessarily a deal breaker, but it's a key factor to weigh as you consider your options. Now let's talk about another major benefit: financial flexibility. Let's face it, retirement isn't always as financially smooth as we'd hoped. Even with Social Security, pensions, or savings, unexpected expenses can pop up, or you might find yourself wanting a little extra to enjoy life more fully. A reverse mortgage can give you that flexibility. Depending on your needs, you can receive the funds as a lump sum, a line of credit, or even monthly payments. This can be a game changer for seniors who want to maintain their independence and quality of life without relying on family or draining other savings. But as with anything, there's a flip side. While a reverse mortgage can provide financial breathing room, it's not free money. The loan accrues interest over time, and that interest is added to the balance you owe. This means the amount you owe can grow significantly over the years, especially if you're not making payments toward the principal. It's important to think about how this might affect your overall financial picture, and whether you're comfortable with the idea of your debt increasing over time. So, where does this leave us? A reverse mortgage isn't a one-size-fits-all solution, but it can be a powerful tool for the right person in the right situation. It's all about understanding the pros and cons and how they align with your goals and priorities. In the next part of our conversation, we'll dive deeper into some of the other key factors to consider, like how a reverse mortgage affects your taxes, what happens if you decide to move later on, and how to make sure you're working with a trustworthy lender. So stay with me, because when it comes to your home, your finances, and your future, you deserve to have all the information you need to make the best decision for you. Now that we've talked about how a reverse mortgage can give you access to your home's equity and provide financial flexibility, let's dig a little deeper into some of the other important factors to consider. After all, this is a big decision, and you deserve to have all the information at your fingertips. One of the questions I hear most often about reverse mortgages is, what happens to my taxes? It's a great question, and the answer might surprise you. The money you receive from a reverse mortgage is generally not considered taxable income. That's because it's technically a loan, not income. So if you're worried about a reverse mortgage pushing you into a higher tax bracket or affecting your Social Security benefits, you can breathe a little easier. But, and there's always a but, there's another layer to this. While the funds themselves aren't taxable, the interest that accrues on your reverse mortgage isn't tax deductible until the loan is repaid. This is different from a traditional mortgage, where you can often deduct the interest each year. For some people, this isn't a big deal, but for others, it's something to keep in mind, especially if you're used to getting a tax break on your mortgage interest. Now let's talk about another important consideration. What happens if you decide to move later on? Life is full of surprises, and sometimes those surprises mean you need to leave your home. Maybe you want to downsize, move closer to family, or transition to a senior living community. The good news is, a reverse mortgage doesn't lock you into your home forever. If you decide to move, you can sell the home and use the proceeds to pay off the reverse mortgage. Any remaining equity is yours to keep, but here's where it gets a little tricky. If the sale of your home doesn't cover the full amount of the reverse mortgage, you won't be on the hook for the difference, thanks to a feature called non-recourse. This means the lender can't come after you or your other assets to make up the shortfall. However, this also means there may be less equity left for you or your heirs. It's a bit of a balancing act, and it's important to think about how this might play out in your specific situation. Let's shift gears for a moment and talk about one of the most appealing aspects of a reverse mortgage, the ability to use the funds however you want. Unlike some other financial products, there are no restrictions on how you can spend the money from a reverse mortgage. Want to renovate your kitchen to make it more accessible as you age? Go for it. Need to cover medical expenses or pay off high-interest debt? You can do that too. Or maybe you just want to take that trip you've been dreaming of for years. The choice is yours. This kind of flexibility can be incredibly empowering, especially if you've been feeling pinched by a fixed income, but it's also important to use the funds wisely. A reverse mortgage isn't a magic solution to all your financial challenges, it's a tool, and like any tool, it works best when used thoughtfully. For example, using the money to pay off high-interest debt or make necessary home repairs can be a smart move. On the other hand, spending it on things that don't add long-term value to your life might not be the best use of this resource. Now let's address something that's on a lot of people's minds: the cost. Reverse mortgages come with fees, just like any other loan. These can include origination fees, closing costs, and mortgage insurance premiums. These costs can add up, and there's something you'll need to factor into your decision. But here's the thing, while the upfront costs might seem high, they're often rolled into the loan, so you don't have to pay them out of pocket. This can make a reverse mortgage more accessible for seniors who don't have a lot of cash on hand. Still, it's important to understand the full picture, including how these costs might affect the overall amount you owe over time. As we move into the final part of our conversation, we'll explore a couple more key points, including how to choose a reputable lender and what steps you can take to make sure a reverse mortgage is the right fit for you. We'll also talk about some common misconceptions and how to avoid potential pitfalls, so stay with me. We're getting to the heart of the matter, and by the end of this, you'll have a clear, well-rounded understanding of whether a reverse mortgage might be the right choice for you. After all, this is about more than just numbers, it's about your home, your future, and your peace of mind. From understanding how a reverse mortgage lets you access your home's equity to weighing the financial flexibility it offers, we've explored some of the most important aspects of this decision. Now let's round out our conversation with a few final points that can help you feel even more confident as you consider whether a reverse mortgage is right for you. One of the biggest concerns I hear from people is, how do I know I'm working with a trustworthy lender? And let me tell you, that's a great question. Not all lenders are created equal, and when it comes to something as important as your home, you want to make sure you're in good hands. The first thing to look for is a lender who specializes in reverse mortgages and is approved by the Federal Housing Administration, FHA. FHA-backed reverse mortgages, also known as home equity conversion mortgages, HECMs, come with certain protections and guidelines that can give you peace of mind. For example, HECMs require you to meet with a HUD-approved counselor before moving forward. This counselor isn't there to sell you anything, they're there to help you understand the pros and cons answer your questions, and make sure you're making an informed decision. Another red flag to watch out for is any lender who pressures you to move quickly or makes promises that sound too good to be true. A reputable lender will take the time to explain everything clearly, provide all the necessary paperwork, and give you space to think things over. If something feels off, trust your instincts. This is your home and your future we're talking about. You deserve to feel confident and comfortable every step of the way. Now let's talk about one of the most common misconceptions about reverse mortgages, the idea that the bank will take your home. I hear this all the time, and it's simply not true. With a reverse mortgage, you retain ownership of your home. The lender doesn't take possession of it, and you don't have to move out as long as you meet the loan requirements, like staying current on property taxes, homeowners insurance, and basic maintenance. That said, it's important to understand that a reverse mortgage is still a loan, and like any loan, it needs to be repaid eventually. This usually happens when you sell the home, move out, or pass away. At that point, your heirs will have the option to repay the loan and keep the home or sell the home to pay off the balance. If the sale of the home doesn't cover the full amount owed, the non-recourse feature we talked about earlier means neither you nor your heirs will be responsible for the difference. But here's something to keep in mind: if your heirs want to keep the home, they'll need to repay the loan in full. This could mean refinancing the reverse mortgage into a traditional mortgage or using other funds to pay off the balance. It's a good idea to have an open conversation with your family about your plans and how a reverse mortgage might affect them down the road. Finally, let's talk about how to make sure a reverse mortgage aligns with your overall financial goals. One of the best ways to do this is to sit down with a financial advisor or planner who can help you look at the big picture. They can help you weigh the pros and cons, explore other options, and make sure a reverse mortgage fits into your long-term plan. For example, if you're considering a reverse mortgage to cover ongoing expenses, it might be worth exploring other solutions first, like budgeting adjustments, downsizing, or tapping into other assets. On the other hand, if you're looking for a way to supplement your income, cover a specific expense, or simply enjoy your retirement more fully, a reverse mortgage could be a great fit. As we wrap up, I want to leave you with this thought. A reverse mortgage isn't a decision to take lightly, but it's also not something to fear. It's a tool, one that can be incredibly helpful in the right circumstances. By understanding the pros and cons, asking the right questions, and working with trusted professionals, you can make a decision that feels right for you. So what's next? If you're considering a reverse mortgage, take your time. Do your research, talk to a counselor, and involve your family in the conversation. And if you found this video helpful, I'd love to hear from you in the comments. Have you or someone you know used a reverse mortgage? What was your experience? Your insights could help others who are navigating this decision. And if you're new here, don't forget to like this video and subscribe to the channel for more tips, insights, and conversations about living your best life after 70. Whether it's financial advice, health tips, or just a little inspiration, we're here to help you make the most of this chapter. Thank you so much for joining me today. Here's to making informed decisions, finding financial peace of mind, and enjoying every moment of the life you've worked so hard to build. Until next time, take care, and remember, your best years are still ahead.